25th, a little gloomy out there for a summer's day. Normally bright sunshine to brighten my day and put me in a good mood. But today, instead of great weather, I have the great Jeremy Little of CMPR. Jeremy, thanks for joining me today.
Happy to be here. Try to bring my own sunshine, bring some happiness to you, Zane.
It is. Apparently, if I got you last week, we might have been even more excited. With some great celebrations in your personal life with one of your so-called sports teams doing well.
Well, I'm a part of it when they win. Of course, it's they when they lose, and it's us when we win. And yep, very, very excited, very happy for my Boston Celtics. Raising number 18 championship was a great week.
So the important question, did they win that title or did the opposition throw it away with tantrums?
Yeah, well, Luka is known to be a bit of a crybaby, but that's, hey, he's got his style. We have our style. We're a team. The Celtics use all five on the court, not just one. And, the better team won.
Fair enough. Guess you can't take it away unless there's some cheating allegation that comes up later. We know Boston teams tend to have that come their way every now and then.
Never happens. Never been proven. Never happened. We're just excellent at what we do. City of champions.
Perfect. Well, talking about cheating today, I've got you on to talk about something in the same lines, being the Corporate Transparency Act. And I was looking into it, and it's one of those things that have just sort of popped up, though it's been around for a little bit. It was enacted almost 3 years ago. At this point, January 2021. And it's an interesting act because it's going to have a major effect on businesses, but I know for a fact most businesses don't even know this is even a thing.
I agree. I mean, a lot of folks just still try to figure it out. What is this? How do we comply with this? Do I need to comply with this? And it still remains a mystery to many. I still remain befuddled that it actually made it through our legislature, given the amount of law firms and lawyers in the world that have hundreds and thousands of attorneys and paralegals that could be personally liable, individually liable, not just the firm, but individually liable for forming a company and potentially filing something that was inaccurate because you're relying on a client to provide information to you. And if that client gets something wrong and you just take their information and file it, submit it to the feds, you would be personally liable. So a lot of people, when they start to hear about it, become very anxious and, of course, want to know more. So.
Yeah. For those who don't know, this is part of the Anti-Money Laundering Act of 2020. So really what they're trying to do is sort of protect that illegal moving of money. The idea was to curb illegal activities such as money laundering, terrorist financing, other illicit financial activities.
Yeah, so you ended up having, we saw through whether it's China, Russia, whoever, quote unquote enemies, right? That folks using their money received overseas to set up sort of shell companies in the United States. And when we get to the businesses that are exempt from this, you kind of see that they're really looking at who's creating companies in the United States that are close, small in numbers, held, maybe buy some property to hold for a certain amount of time and then sell that property, again, laundering that money. That's really what it's designed to try to capture. Larger companies that are already reporting, they're exempt. And we'll get to that list a little later, I think. But starting at, right at that top level, who and what and why type of thing. The why we just kind of covered there, but it's LLCs, it's limited partnerships, it's any corporation, C Corp, S Corp. Otherwise, they are required to file. FinCEN is the semi-acronym for the U.S. Treasury's Department Financial Crimes Enforcement Network. It sounds sort of like a new CBS show, perhaps, that they'll create here on NCIS. But FinCEN is the one that's that's one kind of overseeing the collection of this information, and what they're aiming to get after is what they're calling a beneficial owner. Who in this company has beneficial ownership, it controls, directs, has substantial equity interest. And it's when you get into, so, okay, what does a beneficial owner mean? That is, this is where you get these laws that have definitions, and you got to figure out what that definition is. And then the definition isn't always abundantly clear. But essentially, what a beneficial owner is someone who has significant influence, substantial control, running the company, has management, operations, major decision making of that company. And those people may have equity in the company, and they could not have. They could have zero. They could have zero equity in the company, but still qualify as someone who has significant influence and controls sort of day-to-day operations, if you will, and makes major decisions. They have to report. Think about C-suite, senior officers.
So you think about, say, you've got three C-suite owners, a CFO, CEO, COO. They all each own 10%, but they're making the day-to-day decisions. You would still have to report them.
100%. Yep. And so on that flip side, I'm a silent partner, but I have 25% or more. I have to also report. So it's both. So now you kind of get, okay, geez, who does qualify? And that's kind of the tougher one. The bright line one is that 25%. You own 25 or more, yes, you're in. The more maybe difficult, well, I make a lot of decisions, but not all the decisions. Well, I do report to this person, but I'm making all these decisions, right? Always in my world, safer than sorry, report.
Yeah, I mean, like take a CFO, they could have no ownership and they're reporting to people above them, a board of directors and the CEO, but they've got the decision-making power to open bank accounts, sign checks. I mean, that's significant decision-making power, and they should be reported, even though it's not 100% clear that they should, based on the act, right?
Yeah, I think once if you start questioning yourself, you should. Just don't even stop questioning yourself and submit that information. It's people will push back to some extent, of course, because they don't want to give up anymore. But we're talking about names, addresses, date of birth, things of that nature that you're in either like a passport, driver's license, social. Again, you file your taxes. You've already given the government this information.
Yeah, I guess it gets a little bit trickier, and probably what they're trying to catch is that those companies that have 10 owners, they're all these businesses that own the business, each have 10%. So everything's, we're safe. But if 3 of them are owned at the end by the same person, that person has 30%, they would need a report, correct?
Yeah. I mean, they look through, right? So it's not just the person, but it's the company. So if that company and the manager's there, they will look through those sort of middle layers to see who's behind that.
So it's always looking back to like the real person. But what happens if it falls back onto a trust? How do they make the decision there? Is it the trustee or the beneficial owner of that trust?
Initially, it depends probably if it's irrevocable or revocable trust, but it would be the trustees. Those, if you're the trustee of that trust and you're going to benefit from that, that's who it's going to be. That's who they're looking at.
Okay. So this gets really complicated then, because the net is pretty wide on who they want information on.
It gets, when you start to span out and look beyond just the company, and a lot of folks will try to have those multi-layered companies to try to protect whoever is behind that. So that's what they're trying to get through. And so the more that's involved, the more complicated it will become to figure out who reports and what information. Yeah,
the 25% seems easier. That significant responsibility is tough. But like you said, if you're questioning it, probably just report. I think it's a good decision for anybody. If you're on a board of directors or C-suite, you should just be reporting those people. It seems like a fairly simple situation. And most people, like you said, that information is with the government anyway. It's not like you're handing over new information.
No. And the other sort of tricky pieces, right? So the beneficial owners at one side is the company applicant is this other side that also has to report information. And this is kind of what maybe surprises me the most, because your corporate paralegals, sometimes even legal assistants, sometimes just at a CPA firm, an assistant will file the articles of incorporation or the articles of organization, the certificates of formation in Delaware. That individual that filed that document is liable. And that's again where it becomes, wait a second, you think that some lobby group would have tried to amend this during the legislative process, but I imagine at some point this law will be amended. There will be changes. I know there are discussions ongoing, but I'm sure depending on the election this year, right into next year, there will be changes, because this is again what I mentioned at the outset, where you're receiving information from a client and you're just really just taking it, putting it onto a form and hitting send. The folks who are the paralegals, the legal assistants, the assistants in CPA firms, etc., not certain why they would be the ones that would be personally liable for submitting inaccurate information or false information. Certainly if it's the person in the company, right, that's doing everything on their own, that makes more sense. But so I think there needs to be a little more nuance to this as this law gets enacted and they start to collect more information. That's one element. That's another issue to catch for. And so folks like my firm, and I think most CPA firms I've talked to, most law firms, attorneys I talk to, we have outsourced essentially the entity formation process to another company.
Yeah, also it seems like a major loophole, right? If you want to sort of be fraudulent in this process, you just get a low-level person, or even a person off the street, and you pay them some money. Like, you go file, here's the form, you just have to go push submit. Now it's your name on the document, and you can work your way around. I mean, I'm thinking super conspiracy theory, but it feels like it's creating this opportunity for a problem to occur.
Sure. Yeah. I mean, absolutely. When you kind of lay out that scenario, yeah, it's at this point, it's who hits that button that hits submit could be liable. And so, yeah, certainly you can, again, the ones they're trying to capture, they're going to find a way to get somebody to hit that submit, and maybe that person's here, maybe that person was here, and now they're back in another country.
Okay, so let's talk about applicable entities. Who needs to be filing this? I know we mentioned sort of, LLCs and corporations, all that, but sort of what are these entities? Like, is it me who owns my own business that's LLC? I need a report. Like, where's the line? Where's the parity? Like, who are they trying to capture in this process?
I mean, again, what they're trying to capture is those smaller companies, because so again, who reports any company? If you have, again, any type of corporation, LLC, LLP, general partnerships, limited partnerships, etc. They're all, but then you have the exempt. And so one of the, at least in company wise, so one of the exemptions is for what they'll call larger operating companies. And those are, you employ 20 or more folks in the United States. You've got a federal income tax for the previous years, and you can demonstrate that you have 5 million or more in gross receipts or sales. You are exempt. So there's the anxiety, and then you can start to get into the exemptions. And I think that's gonna be the one that affects most of the folks. I think in the North Bay, businesses around here would be 20 or more full-time employees, and you can demonstrate that through your tax returns that you have 5 million or more in gross receipts. Then of course, other government entities, they're exempt. Financial institutions, credit unions, banks, etc., they are exempt. 501c3s and 501c anything organizations. And again, they are all exempt because they are already filing much more information, much more document, much more regulatory oversight. And so they are already filing much, much more than what's required just even here with this CTA. Mm-hmm. So the government already has their information. This is that step to try to get the information from those other smaller companies.
Yeah, so very important if you're a sole person in your LLC or a small partnership of 1 or 2 people, you got to file this form, right? And you're going to have to really think about who you're reporting on, especially if you've got a management and team place. I know a lot of people step aside and let their team take over. Somebody's making some decisions that will need to be reported. So it does create a little bit of complexity for your small businesses out there.
Absolutely. Yep. And those are the ones just there. I mean, it's one of those difficult things where they're caught up in something that they, probably 90%, 99% probably are doing the right thing already. They are a small, closely held company working hard just to make a profit. And now here's another layer of regulation that they have to pay attention to. It's not, I would say, overly onerous. It's a little time consuming. And my sense is once somebody does it once, if they're going to do it themselves, once they do it once, it would be much easier, here forward. But it's learning it, doing it that once, and then my sense is a small company would be okay going forward.
What are the penalties in place for non-compliance? I'm sure there's going to be a bunch of people that are just like, this is too much work, this is too much effort, I'm so confused, my attorney won't help me, my CPA won't help me, what do I do? I'm just going to ignore it.
Well, like I said, there's personal liability. So the U.S. Treasury can impose fines. They can impose, you will get caught up in their web, and whether or not there's actual jail time or anything beyond that. I mean, those are all possibilities, and they have the full arm of the U.S. federal government to come after you, and it's not something you want to be. You don't want to be flagged with that when you are already reporting, your annual taxes and everything else that you have to do with your business. So it is something not to be set aside. Company, if you're an older company, people have asked, well, my company's been around since the 90s. What do I need to do? Well, you have until the end of this year to file. If you're a new company, meaning you formed January 1, 2024, this year, you have 90 days from formation to file a report. Starting in 2025, once you form a new company, you have 30 days to file. So most companies been around prior to 2024, you have until the end of this year. Companies formed this year, you have 90. Starting next year, you'll have 30. And this also, filing also covers any change in what we've already talked about, any change in those people. So if your CEO leaves, new CEO comes in, you have 30 days to report. If you're a beneficial owner, or one of your C-suite or substantial control folks, if they change your address, they move, you have to file. You have to update that and file that report. So there's, again, things you need to track and make sure that you have that information and can submit accurately.
Okay, so who's helping us small businesses be able to get this done accurately and on time?
Yeah, there's the one that we've rely on right now is called CSC. This is a large corporate services company that's been around hundreds of years, and they've done everything. They filed. They'll be agent of service process for companies. They do all these things. So they're large enough to take on that liability to some extent for an, of course, additional cost. You can submit your information to them, and they will file.
And I recommend them. We're going to be using it for our companies to do it. I think it's the best option. It's who we're referring our clients to at the moment as well. The fee isn't too much. It is definitely helpful. Getting them in place for you as well so they can remind you when you have to do stuff is super helpful. So I would do that. I'm going to drop a link to CSC in the details of this episode so everybody can look out for that as well. I think that is probably the best way to handle it.
Yeah, I would agree. Just because you don't have to have that calendar reminder. They're your calendar reminder. Yep. They take that information, they insert it into the documents, into those applications, those forms, they submit it. And I think there's going to be a level of peace of mind using them. And I think on the federal side, when they see your report coming through CSC, there's probably a level of, okay, this has probably been done accurately. They'll still look at it, of course, but I think that's a helpful place to go.
Journey, this has been super helpful, a little scary, but just for that, for the social media side, can you give us a quick summary of what is the CTA and what do we need to do?
CTA is information gathering legislation that requires all beneficial owners and company applicants to submit personal information. 25% or more equity owners and anybody that has a substantial control over your company must report.
Excellent. Jeremy, I really appreciate the time today. It was great to learn about this, new legislation that's been around for over 3 years already. But we've all got a little bit of work to get done before the end of the year. So let's make sure we get out there, reach out to CSE. They're ready to help you guys out. But that's it. That's it for our episode this week. I will talk to you all again next week. As always, have a good week. Be kind. Goodbye.